Hi, this is Randy Finney with Right Side of the Chart. This is a closing market wrap for Monday, March 2nd, 2020. We'll start out here with we'll keep this one limited to coverage of the broad markets. On Friday, for the followers of Right Side of the Chart that come in for the public content or follow the YouTube channel, which is always the public content, I had to go dark. By dark, meaning it was an important week. I'd normally do a weekend update, which I certainly did, but I wrapped in everything else that we're watching, things other than the broad markets. Crude oil made the case for a bounce in crude oil, which is up 9% from Friday, as well as other things that I cover, treasuries, gold, and all that stuff. So that was for subscribers only on Friday. And the reason I had to go dark is we had the first official long trade on an index ETF all year. In fact, it's been a while, even going back into last year. So we went long QQQ on Friday here at 203.55. The basis for that trade, here, let's pull up that chart. That was first chart here. Here we go. Second price targets hit. So this was Friday morning, about 11:30. And what had happened? The basis for this trade was that QQQ had done several things. First of all, the 200-day EMA. I've covered that quite a bit recently and in the past. 200-day just does a bang-up job of acting as support, and a lot of traders and the algos themselves will come in and buy it. So what happened is we undercut it. And now you might say, well, why would you go along? First of all, we undercut it and regained it. It's actually almost expected when you have a waterfall type sell-off, a near vertical descent. I call this a momentum fueled overshoot. If the level that is going to hold, in this case it was both the 200-day, and I had a price support. I put the stop there once we recovered it, but you had nice support here from all these reactions back in November in early December, about that 200 level, a little over 219, and there was a trend line. I'll get to that in a second. Ooh, I'm going to make you dizzy here, zooming in and out, trying to pan in. So what the basis was. Again, it was a successful defensive support, meaning the 200 level. There's a trend line which is now validated. I'll show you that in the next chart. And then a recovery, and when that happens, usually the buyers step in. And then you can see we also had a deeply oversold readings. The RSI was pinned down. Even after that little bounce in the morning, it was still down to 25.53. And as I've said many times in the past, it's all about statistics, probability. We took one shot. Oh no, I take that back. Yes, we had a shot we took on QQQ last week just before that. We were stopped out. I'm going from memory. I think it was a 1.6% loss. So we closed the trade out today for a gain of better than 5%. It was 5.4% on there. And of course, I had pointed out at the same time on Friday back here, we had the NQ down here and saying these were the targets that snapback rally was likely coming, and said we'd we'd be heading up here ultimately to that resistance zone here, 88.90 to 89.46, which would be 9 to 10% above there. Well, we got it today. We hit it almost perfectly. So let's take a look at that. NQ. There it is. I mean, you can't get any closer than that. That's precision right there. We went up, hit that level there, almost to the penny here. We have a high of 88.83.25 right there, and that previous candle was around there too, 88.79. And I always say this: I always will sell a long trade. With few exceptions, but step in. You want to sell early before the actual resistance level. Why? Because if all eyes are looking at 88.90 and you have a big rally like today where the Qs were up as much as they were, sellers are going to step in early, and that's what they did. So I was out. I'm not going to hold out for the top of the zone. Markets were about to close, and then right after they closed, I think is when NQ peaked, and got a nice reversal. Reverse that short. And I mentioned, pullback targets. You can either target our former first target zone, which was hit today, and of course we had the same old usual reaction there. We came up today. I posted an update this morning right here, still favoring the preferred scenario that we come up and do this with a reaction. That's the thing about these charts. When you see the arrow breaks like this, let's go to this back here, NQ. each arrow break is where a reaction is likely. Those are resistance levels. So here's this morning's chart to update. We're down here. There was still, that's a lot of meat right there on the trade. So this morning, before the market opened, I think, you'll see this was screenshotted at 8:28. So 1 hour before the market was open, there was another opportunity to go long the NQs right there. Preferred scenario had us going up, reaction out in T1, followed by another thrust up, hit T2. And look, we can certainly go up more. Maybe, maybe not. This is a great example of a hit and run trade. Get in, get out. From the morning right here, that was what we were at 84.14 right there. That was about 84.14. There's 84.16 measured up. That was good for a quick 5.5% on NQ. For those that didn't want to go home short over the weekend, you know, I added the trade, and some people had asked. I wouldn't have added it on a Friday if I didn't think we'd go up today. I thought the odds were good, and again, it's all about risk and reward. So we got that, and then again another 5.5% or about 9% total from where we were back there on Friday. And that's it. Where do we go from here? I wish I could tell you with a high degree of confidence. I think we're going to pull back to at least this 8,700 level, but you know, one of the posts that I made today was all about what I call corona fatigue. That's the term I'm going. So that was this post here, corona fatigue bounce targets. And basically I went on to say that, look, coronavirus is serious. I'm not going to try to diminish that. But it's also, I've been here, done this enough, and seen how news ebbs and flows, and people eventually just get, you know, not tired, but it just they kind of tune out to it. And you know, that coupled with extreme overbought conditions in the market. Now the corona fatigue rally could certainly continue. By that, you know, I was referring to, you know, collective numbness of the general public to the constant barrage of negative headlines on the coronavirus. It's not new anymore. It's out there. It's here to stay. And I went over statistics, you know, on the common flu, which kills, you know, what was it, like over, you know, a much higher number of people every year. You know, here it is, you know, CDC estimates up to 61,000 deaths a year from the flu, up to 45 million people being affected. Now, hey, coronavirus may displace the, you know, the common flu as, you know, the next big killer. Maybe, maybe not. Again, it doesn't matter. I can't predict what will happen 6 months from now, and I don't even care. 6 weeks. This was an in and out bounce trade. And you know, on the shorts for a pullback, I think you got to be careful because the markets, again, were extremely oversold. The rubber band is snapping. It's clear that it's snapping today, and it's clear a couple things. We defended support. As I said, showed you, where was it here? I have a QQQ chart. No, I did that in the video for you right here. Let me pull up the QQQ chart, and this will. So now here's the levels to watch. This trend line right here. We have a trend line that on Friday, when I did the video, I said it was a potential trend line because we had only had 1-2 reactions at the point. We had kissed it on Friday at the lows. And so for the subscribers in the video I did and the charts I posted that day, I said potential, you want to see a reaction because you could have kept going right on through there and then you don't have a reaction. Now, what am I talking about? In my book, I say it takes 3 distinct reactions to validate a trend line because any 2 points can be connected at random. So now we have a reaction. A reaction is either a consolidation where you stop cold and then dance on it for a while, or you bounce, and that's certainly a bounce. So the takeaway from this video is we still have on that trade I mentioned that I was considering making this an official target. So for subscribers, I said, look, you're in that trade and you want to ride it up, just raise stops. You got to give it a little room. We might pull back off that level I just showed you if the futures, you know, continue down overnight. So far they pulled back a little bit. Or you can recycle back in. You know, if you're an active trader, you book profits at T2 and buy back in on a pullback. Or if you're a little less active, just lower your stops right now. You should at bare minimum have stops, I think, above the entry price. And again, why not lock in profits on this nice run in case it proves to be just a dead cat bounce with another leg down. So I am leaning slightly towards this move up here. We could certainly do more than that. I mean, anything above that, there's a big old gap. So let me just say this right now. That is a golden level. And if this The Corona fatigue bounce continues. People are just, okay, been there, done that. It's not going to change. I'm going to get up every day, go to work. The world's still going to spin. It's not, things must continue. So if that happens, we're going to bounce up here, I think, right there. And that gives us another from where we closed today. Let me just measure it out for you. We overshot T2 by just a hair. But remember, this is one reason I post the charts of the futures. Where we stopped on QQQ was exactly where NQ stopped when it hit its second target. And NQ, we'll watch them both, but when you see QQQ slightly above resistance and NQ at resistance, you can expect a reaction there, and that's what we have so far. And again, we pretty much hit that at the close today. I'd expect that too. This is what you saw. If you watch the 1 minute charts, this is a ramp into the close. This is a busy chart, but we were gradually moving up. We're in an uptrend. I shared a chart earlier today, a 1 minute chart to show you that, or a 5 minute chart. We're clearly in a near-term uptrend. We were in a near-term downtrend heading into the lows Friday. We went long somewhere in here. We've been in an uptrend. There's a trend line to watch right there. This is a trend line that you can trade. You can pull back, trade pullbacks too. If that trend line breaks, we're probably going to go lower. So you can also look at it this way. It's sort of like a price channel right here. And what I'm showing you here, that was the pre-market session. This was the late day ramp. This is what happens, and this is what I had talked about when the tide finally changes, when that forced selling is over with. The margin call, forced margin call selling, mutual fund and ETF redemption, pension plans and hedge funds trying to minimize and cut their losses by selling. When the switch gets flipped, and it has been flipped, it goes the other way. And so what you had here, these were those that stayed short into the weekend or tried to short the first bounce today, and you can see that last minute ramp, and that was pretty strong. Just the final minutes of trading today, the Qs rocketed about another 3.5%. So that's where we're at. Forget about these wonky candles. Sometimes the after-hour trades will show what you want to look at. Everything's shaded here. This is after-hour session. Look at the candlestick bodies. Sometimes you get these weird prints like that, but that's pretty much what we're doing. So like I said, a little bit of a pullback. That's right when NQ hit that 88.90 level, and so far we've pulled back there about 0.8%. It doesn't look like much here because we're using you're seeing such a big move on the range there, but yeah, it's about 0.8% or so above the highs right there, and actually a little more at that point down to there, about 1% drop initially. And so that's pretty much it. So where do we go in the very short term? Well, my confidence isn't as high anymore. I could see potential up here. If we get there, that's going to be pretty significant resistance. That might provide a shorting out there, or a good time to exit longs, or at least tighten stops and let it run. If you think you're going to go up, we could. Anything's possible. Run up and back test the trend line. Here's the thing, guys. There's a mountain of overhead resistance, significant resistance. Now I'm making a mess of this chart. Let me just show you what that is. You have the big old gap right there from about 224.45 up to about 229, and you also have the key trend line that was taken out on that gap down. I think that was on a Monday gap right there. So a very, very significant resistance starting to come here about 224.45, so if you want to try to squeeze a little more out of this long trade, you might get it. However, we've popped pretty sharp off the lows, as I said, about 9% off the lows right there, if I can grab that. And that's quite a bit for 2 days, but I don't get tied up in these percentage moves. You probably do better off, instead of saying, wow, 9%, just like, wow, 15 whatever percent drop. You can put up Fibonacci's, and as I just did here, and you can see we're coming up on the 50% retracement level there. That's a common level for a counter trend bounce to stop. Here, let me clear all these out and show you the fibs again. So these are things you look at to see just how far we might go and still have this only be a counter trend bounce with much more to come down. And I'll tell you, that's the way I'm leaning right now. I'm not sold on it, but I am leaning towards another leg down and those support levels below to get broken. There's the fib range. This is usually where you're going to see a reversal on a counter trend rally. between the 38.2 and 61.8% Fibonacci retracement level. And that 61.8 comes in perfectly, almost perfectly with that level I just showed you, that key level there. So a lot of eyes will be on that. Some people trade fibs exclusively. I like to incorporate them into with other analysis, and you can see again right there at the right around that 224, 45-ish level. A lot of eyes are going to be on there if we get there. So we'll watch that. Now, that's the near-term bullish scenario. Near-term bearish, we have a confluence of support below, very key support levels. I'm going to roll back here a little bit. Let me try to give you a clean board. Okay, this would be it. These are the levels that we have to watch for below. So we're kind of sandwiched between support and resistance. Resistance being up here, support still being the 200-day. Successful defense of it so far. And again, you have to respect that. Sometimes you test it and you never look back. You had a brief break below. We recovered it the next day or the day after that. And then sometimes you test it and you'll hug it for a little while and take off. But if it goes, and it goes with conviction, you have this trend line just below, which came in at Friday's lows, and then you have this 195.50-ish level there. You can see QQQ had tried for a while. I might tweak that line. I think on another chart I have it a little bit lower, give or take about 195, we'll call it. And that was a key level back then in last year in 2019, where QQQ had tried to get above it, kept failing, and then finally broke out. So look for this area here, this cluster, to act as support on any pullback. Any break much below that would be quite bearish. I did lay out a scenario here that we could still get on the 60-minute chart. Those were the scenarios I laid out this morning, and they're still potentially in play. So, like I'm trying to tell you, is the near term, I'm kind of being flexible. Certainly lighter now after reversing. It took to a mild short position. It just gave a pullback off that cat tag there of the 88.90 level in NQ. But here's something we need to look out for. If the markets suddenly reverse, so some point this week, maybe tomorrow, we could get a quick slide down. I think a lot of people that thought the worst was over today, you'll start to see them panic and freak out. Anybody that went long, I'm sure a lot of shorts were cleared out on a move like this. I have little doubt about that. And so we could get another move down, and if so, it's probably going to be a swift move. I don't think we'll step down like that. The way this works, people start to panic if we even get close to that low again. We'll probably undercut it and then may put in a nice divergent low here. I love swinging those divergent highs and lows. You can see them here. All these divergent highs in the past played out for little corrections during the uptrend, and then finally the big one stuck. That's this one. But just like divergent highs and lows, divergent highs are good for corrections, divergent lows are good for rallies. That last one was pointed out here in SPY, and that was good for this rally. So again, if we look at something like this, if we do take another jog down at or just below those lows, as long as it's not too far below, we have the potential there to reverse and put in a nice divergent low in the 60-minute chart. And if that's the case, that would pave the way potentially for a much longer lasting swing tradable rally if we get that. We'll see. We have to see how it pans out. And I just wanted to say that it's a little bit not conflicting analysis, but just where you have to stay flexible, because that would entail us taking out this trend line in the 200-day, something like this, and then reversing. So maybe we would do something like this there. And I know it's one scenario, and you want to know, will the market go up or down tomorrow? Like I said, I have a little less conviction. Today, I felt pretty good about the rally. I figured it'd be that Corona fatigue bounce day, plus the technicals were there. What happened on Friday was nothing but bullish, the break and recovery of the 200-day. So that's it. Upside is limited. If this helps you to try to quantify it, I see about maybe 3 to 3.5% upside before significant resistance. Should we turn back down and roll back down there, you're talking maybe another 10% downside. I am slightly leaning towards, besides any short-term pullback, I am slightly leaning towards this right now. So That's it. We'll have to pick it up tomorrow. Let me see if there's anything else I wanted to cover here. No, that's about it. SPY, you have this gap right here. You can see gap resistance about 309.57. I think that is up to about 310.65. So SPY is pretty much run into resistance. If it can punch that out, take that out, you have the potential to come all the way up here at about 320.50. That's a little bit below the gap. So what I think if QQQ gets to that gap, that level I was talking about, the bottom of that big old gap from that was Monday, February 24th. SPY, I think, will probably stop a little shy here, about 320.50. I would guess. We'll see. Charts are dynamic, and so is my analysis. So we'll see where we're at then. But I think that's a pretty significant level, likely to stop SPY if it gets there. And the other one I just wanted to share is I really like is and I may add this one on as an official trade. I pointed it out to subscribers today, and I think on Friday as well, is IWM. Just really nice off this 145 level right there. 145 has been the bottom of a trading range that IWM has been in for well over a year now, a good year and a half, minus 2 brief periods. That meltdown into the 2000 or December 24th lows in 2018, which was a V bottom, snap right back up into there, and then continue to respect the top of this range and the bottom of this range. And then we had a breakout right here. Breakout proved to be a failed breakout. We set up in this bearish rising wedge, breakdown. Hit the top of the range, which former resistance becomes support, bounce back up. But then once we fell back into the range, it was a quick swoon down to the bottom. So here we are. We hit the bottom on Friday, and a nice lift so far. And I mentioned this is also why I'm seeing some resistance coming up here. About the midpoint of that range, about the 152 level, is some mild, not very solid, but mild resistance. So again, we'll probably start to come into some resistance here. We already hit it, as I just showed you on the Qs, NQ, and SPY has it just above. So I think it's going to be tough sledding. In other words, I think the easy money's been made already, on the bounce on Friday. So I'll kind of take a step back, see how things play out tomorrow. I showed you the levels to watch, and we'll pick it up and go from there. This has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.